Okay, I'm not sure where we cut off, but I was talking about merchandise inventory and how merchandise inventory increased. So I'm going to pick up there. I believe this is on our statement of cash flows. This is going to be D. So I'm going to put letter D here. And the inventory increase, what does that mean for cash? That means I bought more inventory than I sold. So I'm going to have less cash, which you can see automatically it's a credit because I just debited it to increase it. So it's going to be a credit down here for the cash. Okay, so there's your increase in merchandise inventory. Remember, increase in a current asset means decrease to cash. Okay, now an increase in accounts payable, we see that accounts payable went up. So what does that mean? Give me just a second here. What does that mean for a cash flow statement? First of all, let's talk about the accounts payable balance. It has a normal credit balance. So if accounts payable went up, if we need to increase it, we need to credit it. This is for E, and it went up by $17,000. So what does that mean as far as cash? If accounts payable went up, that means I'm charging more. So I have that cash available because I didn't spend it. I charged it. So cash is going to go up. So if you look, we just credited up there to increase cash. What do? We debit it. Sorry, my computer's a little crazy right now. So 17,000 goes here. Okay. Remember, increase in a current liability. What does that mean? On the cash flow statement, it increases cash. Increase, increase. Now, we see I've already put decrease in accrued liabilities because I looked at the balance sheet and noticed that accrued liabilities, the balance has decreased. Okay, it's very important here that you know your normal balances for your accounts. The normal balance of a liability account is a credit. The normal balance of an asset account is a debit. What that means is if I want to increase the liability, I will credit the account. If I want to decrease the liability, I will debit the account. We want to decrease it because we can see it went from $20,000 to $12,000. So this is going to be transaction L, and it's going to be $8,000. Now, if my accrued liabilities decrease, that means I paid off more liabilities than I charged. So I spent more. So cash is going to go down. We know that because there's a debit up here. Remember, debits have to equal credit. So down here, it is going to be a credit. I have no idea why all of this is popping up. But it is. So let's see if I can get it out of the way. We don't want to see that. Maybe if I can get this to move out of the way. Okay. So here we have a F, a debit, because remember, decrease in a current liability. Decrease in a current liability is a decrease in cash. So for F, our decrease, I already forgot what that number was. I believe it was 8,000. Sorry. Yes, 8,000. I just had to double check. Okay, so there's that. Now we have cash flows from investing activities. We have cash receipt from the sale of land and cash payment of plant assets. So let's look at those quickly. And if we look at our land, we notice that land we sold, and then we sold for $20,000, and then we bought land. So let me look at those two transactions. Cash receipt from the sale of land of $20,000. So let's do that first because that's the first. Let's go ahead and do it for, go ahead and do G, the first one that they told us about. They told us about the plant assets. So let's look at it. This will be transaction G. So what happened to plant assets is we bought plant assets of $124,000. So that's going to be an increase to plant assets for $124,000. But remember, we talked about what this entry would look like. We're going to spend cash. So that's a cash outflow. But remember, all of it wasn't cash. Only a little bit of it was. And I believe we only spent $108,000 on cash. So we'll talk about the $6,000 real quick. It's going to go down here. We have to mention it. We used a note payable, so it's not going to affect cash, but we do need to put it down here in our non-cash investing and financing activities. So there it is down here. So now we have the $124,000. So that should be $16,000. So there's that. Now let's go to our next investing activity. We also sold something, land, for $20,000. So land is an asset. We need to decrease it because it went away. This is not G, this is H. We need to decrease it for $20,000. So what does that mean as far as land? What did we get? We sold it for cash, so that's going to be an increase to cash. It's a cash receipt from the sale of land. Remember, if you sell or buy an asset that's long-term that you're going to use in your business, it's in the investing section. So this would be transaction H. So we have done our cash receipts from operating. We've done our cash receipts from investing. Now let's do our cash receipts from financing. Okay. We issued some common stock. So if we look at our common stock, we issued, I believe it said we issued, let's double check, we issued 36,000. So this will be, and let me make sure I'm following the order here. This will be for transaction I, common stock. Okay, so let's think about common stock for a second. Common stock is an equity account, so we need to, it's always a credit to increase it. So we will credit common stock for $36,000. Now when we issued the stock, we got cash. So that goes in our financing section. It's an increase to cash. It's a cash receipt. So it would go right here. All right, now we also paid a notes payable. Okay, so this would be transaction, I believe it's transaction J. Yes, we paid a notes payable of $15,000. So if we go to notes payable, right here, we have an entry for $15,000. Now, I think I skipped G when we bought that land. Wasn't that in G? We signed a notes payable. So notes payable increased here. by 16,000. Okay, I need to go back and put that as well. And down here we have the 16,000 in non-cash investing activities. Okay, all right, now we paid a notes payable. Anytime we do a long-term liability, it's going to be down here, and that was transaction J. I think the hardest part is just keeping up with all these transactions and what letter goes with what. Okay, and then we paid a dividend. That's going to affect retained earnings. Anytime you have a dividend, it's going to decrease, it's going to take away from retained earnings. So we have a dividend payment of 5,000 here, and then that's going to be a cash payment down here of 5,000. Okay, and then that is all for the cash flows from financing activities. We had issued stock, we paid a note payable, we paid dividends. Okay, so I want to go through and double check and make sure that I have everything on here. I have my net income and all of these. Okay, and then I have to figure out if my net cash provided my net increase in cash. Now, we need to fix that up here. This is where I want to do my net increase in cash. This is going to be transaction L. Okay, and we know it is an increase of 26,000. To increase cash, we always debit it. Increase current asset, we debit it. So down here, a net increase in cash we want to put it on this side, so our debits and credits will equal. Okay, and then we have our 16,000 here, and then I forgot the acquisition of a plant asset by using a note payable. We have the 16,000 here, and then total non-cash investing and financing activities, we need to put that right there, okay, so that our debits equal our credits. So now when we sum this up, and I hope I'm not confusing you more, but sometimes I'll leave stuff out that, let's see if it sums up. Now you can manually sum it up, but I'm just using equal sum parenthesis, and then I just highlight everything I want to add, but you can do that in the calculator. Okay, so equal sum, and I think I did not highlight 53,000 when I did this because I didn't go all the way up with my number. So let me make that a little bit. Let me do this over. I want L86. So I'll make sure I add all of it up. Well, F86, let me just do this again. The sum of now, let's see if I have it all. Now, Okay, so now they equal here.